1650 AM, Radio Shalom Montreal engages its listeners in conversation. We cover local and international issues as they affect the Jewish community. Our talk shows and live call-in programs feature controversial guests and newsmakers. Call Radio Shalom. Let your voice be heard.
We're back live in studio with Samuel Zerzer in the business headquarters of Radio Shalom 1650 AM in Montreal, Canada, with the Money and Business Show. Samuel Zerzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100, extension 200. And now, back to the Money and Business Show.
Morris Kuzma from National Bank Financial, and we're back with our special guest today, Mr. Charles Nenner, who's on the phone with us live from Amsterdam. He's the founder and president of Charles Nenner Research Center. And our question for today is, what will trigger the S&P 500 to drop in 2012 and 13? And later on, is the Chinese real estate in a bubble? Go ahead, Sam.
That's good. I want to hear about that. Also, Charles, unless the United States unveils more stimulus, like the two previous quantitative easing or bond purchasing program, the recent market rally can't last, Charles. What would trigger the S&P 500 drop another 600 or 700 again? You spoke about the war. There's a war pending. Would that trigger, or is it just the economy itself or the euro? What would trigger?
Well, first of all, I don't think there's any stimulus necessary at the moment. It's muddling along very nicely. Not for the people who are out of a job right now. But you talked about financial markets. Financial markets like very low interest rates. The corporate profits are at record highs. If there would, at this moment, if there would not be the threat that anything can happen in Europe, then the market probably would be already higher than it is now. I think the problems will come from somewhere else.
You spoke about the war. Would that trigger the fall of the S&P or the stock market?
Well, I think that definitely that will trigger it. But the fear of war, I think if we look back in a couple of years, then we see that the war doesn't have to start with a bang. It can start very slowly. So I don't know if they're going to close down the strait where all the oil comes from. That will be a major problem. We're bullish on oil. Again, I do my cycle work, and the reason always comes later. The oil prices are going higher. But the United States says this is a red line. I don't know what they mean by that, because once you cross the red line, then what do you do next? So I think we're in for big trouble, and the world is very unstable. It's not like you sit in Canada, United States, and there's a First World War, Second World War, and you're safe at home, because it can happen anywhere, and that will bring a very doom and gloom over the investing public.
So you also do cycle research on war. How far back do you go? 200 years, like 500 years?
No,
yeah.
3,000 years. It started the Mandarin Empire in China. And the problem is that the wars we had now, if we call them wars in Iraq and Afghanistan, don't even show up. That means the conflict was too small to be shown in the cycles. So we're looking for something bigger.
So what do you consider a war, like a World War I, World War II? Is that the kind of war we're looking at? Catastrophic?
Korean War?
Well, those are very, I would say a Vietnam War is a war like that, the Korean War, that, it doesn't have to be a World War I and II. So it could be anything. My idea is that we have a war against terrorism, that they get the weapons of mass destruction in their hand, and we don't really know how to attack them, because until you figure out who did it, they do it again. So it's going to be a very complicated situation.
Does the war cycle goes in in 20 years and 30 years, the major ones, or 50 years?
There's a major war cycle of 100 years. So if you take 2014, 13, and you go back then, and you have 100 years, then you have the First World War, and another 100 years, you go back to Napoleon, and 100 years. To take a look on Google and see what wars there were around 1600, 1700, 1800, 1900. It goes back actually to 1200, 12, 30, 40, 50, 60, 70, 80, 1900. And you see there's a very regular 100-year cycle. There are much more than that, but that's a very simple one. You can find out yourself.
Okay, so
you just go to, it's interesting, you go to Google and you say major war in 1600, and it will bring up the major war, and then the major war in 1700s, and the major war around 1800s, and then you see it yourself.
Okay, so I guess a century ago we had a major war, and is there a major war, in the horizon, like you said, like in the third quarter or the end of 2012?
Well, that's too much of pinpointing, but it's because these wars usually take a long time, so the cycle is very wide, but it should start late 2012, 2013. And like I said, it can start very slowly without you noticing that there's a major conflict, and it can turn out into a major conflict.
Charles, in the United States, 92 million baby boomers are now shifting on average, from spending and borrowing to savings and paying difficulties with problem loans. Will the Chinese economy, will it not escape the woes afflicting the global economy?
Well, the numbers I see is that they slowly, and that's how usually capitalism starts. First you export goods, and then you have people who make money, and you create an internal market. So the Chinese are very busy creating an internal market. Of course, they still need the exports, but soon they will have an internal market also that they can sell goods to. I think that that part of the world, talking from Singapore to Vietnam to China, especially Australia, will escape the mess of the economic downturn. There will be a downturn, but not as bad as in the rest of the world. And that's why we're very interested in Australian dollar long term. I think that's going to be outperforming.
So I was just going to ask you, which country do you like the most in terms of fiscal policy, its economy, and interest rates? Is it Australia? Is that it?
Yeah, I think also Canada has things pretty well organized compared to the rest of the world.
Why do you like the Canadian economy? Is it because of the financial system, how sound it is, or is it because of the commodities that we sell?
No. Of course, of the commodities, and of course of the soundness, relatively soundness of the financial system.
So you'll be buying the Canadian dollar?
We're looking to buy the Canadian dollar. Not yet. At the next cycle low, I think that is in a month or so. But especially if you see it at 101, then I think it's a buy. Still, it's a couple of weeks early, but I think longer term, it's a nice currency to be long.
So you feel like it may go to 113 U.S., 114, 115. What is your target? Let's say in 1 year from now, the Canadian dollar.
To be honestly, I'm not ready with that question,
okay.
So I cannot give you a target.
And what about the Australian?
All these things regularly are on the website against charlesnenner.com, and if you take the research, what you can get for free for a while, it will give you all the levels and the timing and the cycle lows and the cycles high. So everything is there. I just don't have anything ready in my head, but you can really look it up.
Okay, definitely will. Do you still believe that the bull market in precious metal will it continue, as you mentioned in our last show, that gold may hit like 2,000 or 2,500 in that level? You still believe in that? Yeah, that's still, and I think it should start in a couple of weeks or so. The next bull market or bull move. So you'd be buying around $1,600 the gold. Around that level?
I would prefer. Our level is 1550, where we started to be interested. I think you get a chance to see it going one more time, starting next week.
So what do you like gold?
Next week have a cycle high.
So what do you like gold, Charles? Is it because of its stability, or it's because it's hedging against the U.S. dollar? You feel the U.S. dollar is coming down, or what's happening in the eurozone?
Well, there are all kinds of reasons why people buy gold. One thinks we're going to have hyperinflation. One thinks we will have deflation. You should know that in 50% of the history of the gold bull market, it was deflation. It was not inflation. And most of for hundreds of years, the major item was always deflation. People just remember what they went through, so they think inflation is the problem. So deflation, then you might have a war problem. Then a lot of people are buying gold coins. because they say, listen, if we're in a big mess and people don't accept paper money anymore, then at least I can pay my bread with the gold coin. And that is probably, gold is then easier to accept for the guy who sells bread than a silver coin. So that's why I think gold is going to outperform.
So you'd be buying gold at this level, more or less?
No. I have a cycle high in a week. I think we still go down one more time, and then I will buy it.
So 1550, what do you say, 1550 gold, and 1550 the price target, and then you start buying. Okay.
We're at 1661 now.
So another $100.
But he's right about gold compared to gold stocks or other things. I mean, gold has doubled since 1998, and the stocks are all at the same price, and gold has doubled. So a lot of frustrated investors holding stocks out there.
Go ahead, Charles.
I think they're going to catch up, but not yet. Again, the cycle on gold stock is down. In the end, they're going to catch up. They must. But now it's too early. I think they will go lower still.
Okay, good. Charles, just stay on the line. I have Charles Nenner, founded and is president of Charles Nenner Research Center. My name is Samuel Izurza for the Money and Business Show on Radio Shalom, CJRS 1650 AM in Montreal. We'll be right back in 2 minutes.
But you fear